Welcome back to the channel. Today we're breaking down Shopify's latest earnings report and analyzing the future growth projections for one of the most important names in e-commerce. With shifting analyst sentiment and a critical look at EPS trends, there is a lot for shop investors to unpack. Before we dive into the charts, please like this video and subscribe to the channel for more data-driven market analysis. Let's get into the report. We begin with a look at Shopify's current market standing on the Nasdaq. As of the latest trading session, Shop is priced at $112.70, marking a solid upward move of 1.84%. The trading volume is exceptionally high, with over 18.8 million shares changing hands, reflecting the intense liquidity and interest in this e-commerce leader. Taking a look at the 52-week range, the stock has moved between a low of $69.84 and a high of $182.19. The current price level suggests that while the stock is well off its yearly lows, it is still significantly below its 52-week peak, leaving plenty of room for debate regarding its next move. This overview provides the necessary context as we transition into the fundamental earnings data that is currently driving this price action and shaping the broader market's expectations for Shopify's performance in 2026. Turning to the earnings per share chart, we see a company that has maintained a consistent winning streak for most of the year. The dark blue bars represent estimated EPS, while the light blue bars show the actual reported figures. Shopify delivered definitive beat results in the first, second, and third quarters of 2025, showing a strong ability to outperform analyst expectations as its platform continues to scale globally. However, the fourth quarter shows a notable shift, with the reported figure coming in slightly below the estimated bar. Looking ahead into 2026, the projected trajectory remains highly ambitious. Analysts have set a path that starts with a significant estimate for the first quarter and climbs steadily through the year, with Q4 2026 expected to reach its highest point near 0.5. This forecasted growth indicates that despite the slight Q4 pause, the market expects Shopify's earnings power to accelerate significantly over the coming year as it continues to expand its ecosystem and merchant services. The earnings surprise table provides the specific percentages behind the beats and misses we just observed. For the most recent quarter ending December 2025, Shopify reported an EPS of 0.38 against a consensus forecast of 0.41, resulting in a negative 7.32% surprise. This minor disappointment contrasts with the rest of the year. In June 2025, the company delivered a massive 25% surprise, and the September quarter saw a 12.5% beat. The year started strong with a 5.88% surprise in March. These figures highlight the beat and raise cycle that has largely supported the stock's valuation. The slight miss in December is a critical data point that investors are closely scrutinizing as it breaks the momentum seen in the previous 3 quarters. While the miss was relatively small, it creates a new layer of uncertainty that analysts will need to account for as they refine their models for the 2026 fiscal year. Looking ahead to the quarterly earnings forecast, we see the specific targets analysts have established for the upcoming quarters. For the quarter ending March 2026, the consensus EPS forecast is 0.22 based on 11 separate analyst estimates. The range for this quarter is quite wide, with a high EPS forecast of 0.28 and a low of 0.15. As we move through the year, the consensus rises to 0.29 in June, 0.35 in September, and 0.52 by December 2026. Notably, the revision data shows that sentiment has been relatively quiet over the last 4 weeks, though the September quarter did see 2 upward revisions. The lack of downward revisions across most quarters suggests a stable level of confidence in Shopify's near-term targets. The high number of estimates for each quarter indicates a high degree of coverage and scrutiny from the financial community, ensuring that these consensus figures are a well-vetted representation of professional market expectations. The yearly earnings forecast paints a picture of robust, multi-year growth for Shopify. For the fiscal year ending December 2026, 12 analysts have converged on a consensus EPS of 1.37. Looking further out, The growth is projected to continue its sharp upward climb, 1.74 for 2027 and 2.63 for 2028. This represents a doubling of annual earnings per share in just 3 years. While the number of analysts naturally decreases for the later years, the direction of the consensus remains firmly bullish. The high-end estimate for 2027 of $2.42 suggests that some analysts see significant potential for Shopify to scale its profitability even faster than the current consensus indicates. This long-term data suggests that while the market is processing immediate quarterly results, the fundamental thesis for Shopify remains one of massive scalability and increasing profit margins as it matures into a dominant global commerce platform for both small merchants and large-scale enterprises. The change in consensus chart visually tracks the stability of these analyst expectations over the past month. We can see the forecasts for both the full fiscal year and 2026 and the upcoming quarter in March 2026. Comparing the 1-month ago data to 1 week ago and current, the bars remain remarkably steady. This visual consistency confirms that recent market developments and the latest earnings data have been fully integrated into analyst models without triggering any significant shifts in the consensus targets. While there is no positive momentum driving the bars higher at the moment, there is also an absence of negative momentum pulling them down. This stability indicates a period of established equilibrium where the market is satisfied with current projections. For investors, this plateau in the consensus suggests that the current stock price is largely reflecting these stable earnings expectations, and the next major move will likely depend on the company's ability to deliver a significant surprise in the upcoming quarterly reports. The Estimate Momentum Tech Summary clarifies the recent shifts in sentiment with precise detail. For the fiscal quarter ending March 2026, the consensus EPS forecast has remained unchanged at 0.22 over both the past week and the past month, with none of the 11 analysts raising or lowering their forecasts. However, for the full fiscal year ending December 2026, the consensus has remained steady at 1.37, but the summary notes that one analyst has lowered their forecast during the period. While this single downward revision is minor relative to the 12 total estimates, it is a data point worth watching. Estimate momentum is often considered a leading indicator for stock performance, and the current zero momentum state for the near term, combined with a slight cooling for the year, suggests a more cautious approach from the professional community. These minor adjustments reflect the evolving professional opinion as analysts balance Shopify's long-term growth potential against the near-term operational challenges and the slight miss in the most recent quarterly report. Finally, we look at the raw tally of the number of estimates changed to confirm the breadth of this recent sentiment. The table shows 0 revisions for the March 2026 quarter, reinforcing the near-term stability we've discussed. For the full 2026 fiscal year, we see 1 downward revision and 0 upward moves. This single downward adjustment out of 12 estimates represents a very small minority of analysts taking a slightly more conservative stance. The lack of any upward revisions during this period suggests that the beat and raise fever has temporarily cooled. This concentration of zeros across the board indicates a strong, if cautious, consensus in the financial community. For investors, this tally serves as a final confirmation that the market is in a wait-and-see mode, holding its breath for the next major catalyst or earnings announcement to provide the clarity needed to push these targets higher. The stability seen here sets a firm baseline for Shopify's expected performance as we move further into the 2026 fiscal year. In conclusion, Shopify's earnings data points to a company with strong historical execution and a clear path for significant long-term growth. While the recent quarterly miss and the plateau in analyst revisions suggest a moment of consolidation, the multi-year forecast remains highly optimistic for 2027 and 2028. Shopify continues to be a dominant force in commerce, and its ability to scale profitability will be the key narrative for investors to follow. Thank you for joining us for this deep dive into the numbers. Don't forget to like, subscribe, and hit the notification bell so you never miss an update on Shopify and the broader markets. We'll see you in the next analysis.